and welcome to another episode of What's Going On in Banking. This is your co-host, Stacey Bryant, Director of Client Development at Cornerstone Advisors, accompanied by the one and the only host, Chief Research Officer, Mr. Ron Shevlin. Ron, how you doing? What's going on?
Doing great, Stacey. Love to hear what's going on with you. I haven't been traveling very much, getting out there, so would love to hear what you're seeing and thinking these days.
Wonder why. Well, no, we'll get to it in a minute. But before anything, I know that, we always say banking is about connections and so is food, right? So every city, and I'm always on the road, Ron, but every city that we travel to, there's a story to tell from one menu to another. We have to eat at the end of the day. And I just wanted to kick off today's episode with what's cooking in banking, our segment on where we talk about what's fueling us on the road. So I was in DC actually last week for the Capital Affair Gala hosted by the Credit Union for Kids Initiative, and they support Children's Miracle Network hospitals across the U.S. But what I did manage to do was I was trying to go ahead and manage a dinner reservation with Dogon. I'm not sure if you heard of those folks, but Chef Kwame, I started following Chef Kwame several years ago, and he was on Top Chef. But this restaurant is located within the Salamander Hotel, and it curates like an entire Afro-Caribbean menu, similar to Tatiana in New York City by the Lincoln Center. So here's the reality. Did I get a reservation? No. But I can tell you about Tatiana in New York City, also by Chef Kwame. And I'm a New York City girl, Ron. So I love the fact that they take all these like Afro-Caribbean and intersect it with fine dining. So I remember when I went to Tatiana, they had like this escovitch and they turned it into like hamachi crudo. They had like a braised oxtail and a crab rangoon to intersect Caribbean with Asian flavors. And then they assimilate the classic New York City Cat's Deli pastrami sandwich. And Chef Kwame has a dish where they provide a short rib pastrami dish that literally melts in your mouth, right? And last but certainly not least, I know one thing I remember having was their Bodega Special, which is like a homemade cosmic brownie and powdered sugar donut ice cream. So good. So good. But that was yummy. And I digress. And back to why I was at DC. Just wanted to send a special shout out and thank you to John Brasakis and the entire Maryland DC Credit Union Association for having me. Together, I think that network of Credit Union for Kids, they raised over $9 billion towards life-saving medical care for children. So it was nice to not only rub elbows, but wear gowns and just chat about what's going on in the credit union world and in the people helping people world. So how about you? You said no travel. What happened?
Well, nothing happened, but it's funny. You mentioned a few things. First of all, you mentioned, we all have to eat at the end of the day, and I kind of chuckled internally because I have to eat like a lot of times during the day. And here's something else I learned. So does my new granddaughter. She eats about 5-6 times during the day too, and that was one of the reasons why I've been off the road. My oldest gave birth to grandchild number 3, but very importantly, granddaughter number 1. So yeah, we've not been going out to restaurants in the past week and a half or so, but it's all good because we've been hanging out with the grandkids and the new one. And so yeah, kind of maybe not so good on the eating front. And by the way, that sounded absolutely amazing. But the common thing is the kids in between. So what did you hear and learn at the gala that you thought was interesting?
Yeah. Well, first of all, congratulations. You're not just going to let us know that you just had a new addition to the Shevlin family. So congrats to the grandchild number 3. And can I ask, what is your grandpa name, by the way?
Papa.
Oh, well, congratulations, Papa. I know,
Okay.
I know that little Miss Grandchild number 3 is ready to rock the world, and the world will surely be rocked in an amazing way. But yeah, we back to the gala. Between that gala and that same week, I actually had to present for 2 banking associations where they wanted to have the conversation, and this has been the theme of my travels for this entire year so far, Ron, and that's been tell us about AI, your favorite. Tell us what about AI, right? Number one, how are other community financial institutions, how are large financial institutions, fintechs, the macroeconomics of it? People now want to hear more use cases. So we went ahead along with our buddy John Meyer at Cornerstone Advisors. Him and I tag team and was pretty much providing what this looks like from, what type of AI down to agentic AI. And I came across this article and I found just a striking, check this out. I'll keep you on suspense here. But there was a article published by McKinsey where they speak about agentic AI adventures, and essentially they show a graph, and we'll share it in a minute here, where travel consumers are becoming more comfortable with AI and are increasingly exposed to AI tools that can enhance travel experience. They go on, and I can tell you, and I can attest that I created a 5-day 50th birthday and anniversary trip for one of my girlfriends. She needed help. And I asked, again, how many days, what was the budget? Where do you want to go? What type of foods, or what is, her husband into? Again, trying to extract all this information. And I loaded it all up into ChatGPT, and it provided a day-by-day itinerary down to, there was a section where it said they were going to San Francisco, also the Napa Valley area, Ron. And there was a section where it said on day 2, you're going to walk to this particular landmark at like 2 p.m. because at that time the sun shines a certain way, and that is a popular picture that a lot of tourists take, right? So when you think about agentic AI, when you think about all these prompts and travelers being able to now rely on AI to build their itinerary, I think I read that 90% of these travelers have raved their agentic travel itinerary built up, so to speak, as safe, as secure, right? The experience was optimal. And it makes me think back to, okay, if I am let's say I'm a new generation, Gen Z, I'm a millennial, and I just I got an inheritance, or perhaps I'm an influencer and I'm getting a lot of money and I have certain financial goals, right? I want to retire within 10 years. I want to be able to fix my credit so I can buy my first house, whatever it may be. How amazing would it be, Ron, to, just like a travel itinerary, to be able to just put my financial goals, where I may be missing the mark, if it's, credit score dependent. What does this look like as far as retiring in X amount of time based on the income that I'm receiving? And it makes me think about the same question that a lot of these community banks are asking, and all across my travels is, a lot of folks, at least a third of the CEOs and decision makers of financial institutions that I come across with, are wanting to know how other folks are using it. How do they plead their case to the rest of their stakeholders, if it's a bank, right? The rest of their, board members, to get that buy-in now that we're wrapping up 2025 and going into 2026, because we all know that it can all be, these decades and decades upon which these financial institutions were built, it can all be gone if they're not ahead of what's happening, right? And can we even identify that as being ahead now in close to December of 2025? What do you think there?
Well, I'm glad you brought up this example, because I think it's a great one that should center a lot of bankers on looking at what the opportunities are with agentic AI tools and technologies. Stacey, you've heard this probably way too much, and anybody who listens to this has heard me kind of rave a little too much on the definition of all these things. But I'm still seeing a lot of confusion out there. I saw recently a post on LinkedIn where somebody was saying, thanks to agentic AI, we'll be able to predict people's needs. And I'm like going, no, that's not what agentic AI does. That might be generative, it might be machine learning oriented, but it's not agentic AI. Agentic AI are tools and technologies that do things. They accomplish tasks. They get things done. And I think the travel experience is a great example, because it is an example of it doing something. You're asking it to create an itinerary for me, and it goes out and it figures out the right times, where you have to be, makes the reservations. It does all these things for you. It's not predicting anything. It's not telling you, okay, you need to spend less money on things and improve your investments. It's a goal. It's a task. Now, I think it's really important from a bank perspective that they think about this from in terms of experiences and not just advice and guidance. The book I wrote, it's now 10 years old. I know, totally out of date. Everything I said in there is like ancient at this point, but it was called Smarter Bank. But really, it was the subtitle that I thought was more important. I called the subtitle Why Money Management is More Important Than Money Movement. And I did that because I really thought that a lot of bankers were thinking that payments and money movement was the real answer to success. I said, no, it's helping people manage their money better. And that isn't strictly advice and guidance. It's about experiences. And I think bankers should be thinking about this in terms, they may say, well, but I'm not in the travel business. No, you're not, but you are in the business of helping people manage their money better. And travel is an example of something that could be ridiculously expensive or more affordable, depending on how you do it. And so, thinking about experiences and anything that involves spending money, I think is in the realm of what bankers could and should be doing. Second reason I really like your example of the travel is that I think these days a lot of bankers are a little too focused on thinking, well, I'm not going to say too focused. They are rightfully focused on looking at agentic AI from an internal process and productivity perspective. And I think that's absolutely correct. I shouldn't say that they're too focused on it because that's super important. But it just goes to show that there's not just the productivity example of this, but the perspective of how does this change what you offer your customers and your members from a product delivery perspective. Last point I want to make on this, because I think it touches on a lot of the things that you're hearing in your travels from bankers around agentic AI, which is the resistance that a lot of employees have to using these tools in fear that they're going to replace them. So I think it becomes very important on the part of the executive team and even the board to make sure that the messaging around this is about human productivity and support, not replacement. Although, look, the reality is that at some point in time, there are going to be roles that get replaced. If you were a telephone operator 50, 60 years ago, you are not a telephone operator today. We don't have anything like that anymore. And there are going to be roles that become extinct, and that's just the way it goes. But I think for most folks in today's banks and credit unions, this is really about augmentation, support, making things faster and easier, making people smarter, better, and faster. I think a lot of the AI tools that we've seen so far around conversational AI and machine learning, and now more recently generative AI, have helped to a certain extent. I think we put this stuff in rocket speed when we start talking about agentic AI tools and technology. So definitely, I think this is going to be the hot topic for 2026, Stacey.
Yeah. And I'll say this, even going back, you touched on so many things I want to remark on, but like going back to the travel, leveraging agentic AI for travel, I kept reading throughout this McKinsey article, and, they mentioned that there's some important caveats that a lot of like your traditional travel boutiques, right, even if they're online, right, like your Expedia, that may face unique challenges. And let me know if this sounds familiar. Fragmented data, legacy systems, and heavy reliance on human service and experience rather than purely transactional. It sounds just like banking. It sounds like a lot of these community banks and a lot of folks that want to know more. But I always think about the three little pigs, right? And if they build AI on top, anything AI, right, on top of their current foundation, the big bad wolf will huff and puff and blow them out, right? And I can say too in my travels, like even when we think about a lot of the bigger shops, Bank of America boosted its annual tech spend to $4 billion, dedicating a significant portion to AI. Our guy Al Dominic, he just posted on LinkedIn not too long ago. He was remarking on benchmarking an $8 billion bank, and how having a 2.5 roughly per billion in assets annual tech spend is what we're seeing, or what the Cornerstone Advisors performance benchmarking tool is seeing across the span of the US, right? So, and even back to, I also got that question every time I have any type of AI or innovation or tech conversation is, what about the people, right? And how do you keep the hearts of people, right? And when we think about the SoFis, the Chimes, and all these folks, they don't have yet what community banks have gained, which has been trust, right? So far, that can change, right, with behavior. And I know we're going to speak about that in a minute, but I know that it also, shout out to John Meyer. He put out an article out there. I think it was with Bank Director he referred to the body snatchers, right? And how there was a movie some time ago where aliens came out for outer space and would invade human bodies, and the way that you would distinguish it was, there wasn't empathy, right? There wasn't any emotion for those aliens who invaded it. So if we think about so far right now, where we are in time, the Agentic can perhaps get the job done, right, with certain prompts and your data entry and ingesting everything that's within that specific large language model, but they're not going to be able to still decipher, that EQ, right, and intersecting it with IQ. So to your point, maybe your traditional manual entry jobs may be absorbed by Agentic, right, AI, but new jobs will be created. We're going to need folks that, tap into, AI councils, right, and committees and governance committees and data scientists per financial institution if they want to be viable for a good amount of time. So I wanted to add that. And yep.
The other thing I would throw in here, Stacey, is I've been carrying this idea around with me for about more than a year now that the impact of a lot of AI technologies is on jobs is going to require us to be a lot more creative. I'll give you a quick story. A couple of months ago, my wife goes out to the bank to deal with something. Yeah, she went to the branch because it's just a lot easier to look at the person face to face and yell at them, because they don't give us this opportunity to actually yell at you face to face, even though this counts. So she goes to the bank, comes back and says, that was the best bank experience I've had in years. I was like, really? Why? She said, because this guy knew all the systems and knew how to work around all the limitations of the systems. And it got me thinking that that's a form of creativity.
Yeah.
And so as some of the rote manual stuff that we have to do and that bankers and folks that work in banks have to do today gets automated and replaced by AI tools and technologies, it doesn't replace us. It frees us up to do different things. And part of that different things should be forcing us to be more creative about solving problems and creating offers. And that's, I think, one of my big concerns and why I like the travel experience is because if you were to ask most people in most community banks and credit unions today, Stacey, hey, go redesign a new product, they'd be like, I don't know how to do that. We've never done that before. Well, what are the needs of your customers and members? What are the problems they face in managing and spending money? I don't know. We don't ever think about that. We don't ask about that because they're so account focused. They just focus on, well, how do I manage an account? Not about how do I manage money and spend money and do all that. And now with tools that take care of a lot of that's the legwork for us, the manual stuff, I think it's going to challenge people to be a lot more creative in their jobs, in their roles, and not just free us up to do the more important stuff. Well, what is that more important stuff? Being more creative. I think that's got to be the challenge. There's that popular saying, you're not going to lose your job because of AI. You're going to lose your job to someone who knows how to use AI. No, I don't buy that. That's nonsense. You're going to lose your job to somebody who's more creative than you are. And that, I think, becomes the challenge, and why using the tools to become more creative and being more creative, I think, will differentiate a lot of folks going forward. And I think that may be a challenge for some of the younger folks who, this is the odd part about it, is, aren't finding new jobs today because of supposedly AI tools and technologies. But without the experience in the job for a few years, then how do they really understand what the challenges and problems are to be more creative in process design, be more creative in product design? I think we're setting ourselves up for some real shortfalls and problems in the next few years because of all of this.
I I I would disagree with you said you don't think that, you mentioned folks losing their job not for someone who basically knows how to AI better than them, right? I think that that is the case, and I'll end this part by saying, in order for you to be creative, where else can you delegate, right? Like, so for me, for instance, if I am going from one event to another while making sure that I'm spreading the right information out there, I want to be able to work smarter, right? There's just so many distractions. So I think that by learning AI, by learning how other people are using it, by learning, what's new this week and emerging trends for anything that touches that, it makes me more creative. So I think I would go back to what you said and add both of them, right? I think that creativity is also dependent on what you can delegate and what you're able to now do and now that you're freed up. But let's talk SoFi in the world of innovation. What's going on with them, Ron?
Yeah, I wanted to bring that up for today's episode. Uh, SoFi recently announced that crypto is back, not just in general, but specifically on their platform. They now have become the first and only national bank, chartered bank, to offer their customers the opportunity to invest, buy, and hold in cryptocurrency integrated into their digital banking platform. I think that should send a real signal to a lot of pretty much every other bank and credit union in the country, because obviously they've seen a huge amount of growth from an account perspective over the last couple of years with a product set that really kind of blurs the line between a checking account, a payment account, and an investment account. It's just all there in one, and they don't make those distinctions, and they're seeing huge growth from an account perspective, really targeting a set of consumers, younger obviously, who don't care about these differences, want really good digital delivery. And now with the opportunity to buy, invest, and hold in crypto, they really differentiate themselves even further. I think this is important for all mid-sized banks and credit unions to understand and see. I wanted to bring up sort of the demand side of the coin. We're currently doing some consumer research. It will be for a report that's been commissioned by a couple of financial institutions, eight to be exact, not just a couple. And so the results of this are never really going to go very public, but I can share a few data points. Stacey, 70%, almost 80% of Gen Zers and millennials say that there is at least somewhat of a chance that they are going to purchase more crypto in the next year or so, or invest in crypto the next year. About half of that 80%, say they're very likely to do so. Even Gen Xers are getting into the act here. Nearly 70% said that they are at least somewhat likely. For those of us who are baby boomers, and if there are still baby boomers sitting in the executive suites of banks and credit unions who only know the world from their own perspective of the baby boomer perspective, you are very out of touch, because only 10% of baby boomers said that they want to plan to invest or buy cryptocurrency in the next year. So there is huge demand for this. So crypto is not just back from a SoFi perspective, crypto is back from a consumer perspective as well. I struggle and worry about this a little bit because I think there's still a somewhat of a get-rich-quick mentality and attitude among consumers who want to get into crypto, thinking that it's going to be some sort of get-rich-quick thing. And, look at what's happened over the past couple of weeks, at least from the perspective of when we're recording this. The price of Bitcoin has dropped precipitously over the past couple of weeks. So maybe they see that as a buying signal. I don't know. But I think it's a message that a lot of banks and credit unions really need to pay attention to.
Yeah, I'll tell you this. I think about attrition, right? And one of the main reasons why a lot of banks and credit unions that contributes to attrition is perhaps like the lack of technology, right? And how banking is changing. To your point, right? With the folks, the baby boomers, perhaps still behind the scenes, thinking about their products and services that they offer, and still using the same tricks that got them, or not tricks, so to speak, but the same tools that got them to where they are today. And obviously, that's not going to be the case right now, right? SoFi, they have literally provided. I want to say that they provided like some sort of a digital one-stop shop to how many members? I mean, they have like what, over 12 million members, right? If my memory serves me right. So we think about they're breaking away with that traditional banking, and and the way I look at it is even for the smaller shops who perhaps may not be able to add what this rail would look like, right? To exchange crypto, to buy this. And I always think about also, earlier this year with the Genius Act coming underway and everything happening there. I think that my take is that there strategic partnerships with those folks who can provide these rails with community financial institutions should be tended to a little bit more, right? A little bit of water, a little bit of air. Let's kind of sprout this partnership a little bit more, only because at the end of the day, regardless of what happens with crypto tomorrow, a year from now, I think that they, as in these community shops or banks overall, will need to have these rails in order to maintain a newer, long-standing membership or customer base. Without that, everything is changing, right? So that's my take, Ron.
Sounds good, and I will let you have the last word for today's episode. And thank you for all your thoughts, Stacey. Thank you, everybody else, for listening in, and we hope to see you on another episode of What's Going On in Banking. I'm Ron Shevlin. We're always here, as always, with Stacey Bryant.
Always a pleasure. If you enjoyed today's What's Going On in Banking episode, make sure to hit that follow button on Spotify, Apple Podcasts, YouTube, or wherever you're listening. We've got more great conversations, nitty, witty, gritty, coming your way, and you won't want to miss them. Thanks for tuning in.